Hey folks, David Frost, mystrategicforecast.com. You're here for another episode of Common Sense Market Analysis. Today is Wednesday, February 25, 2015. You're looking at a daily chart of the SPY, and we had basically another not much going on day, right? It was basically a flat day, down a 0.62 in the S&P, that's flat. Dow was up 15 points, that's flat. Transports were down 0.5%, but the NASDAQ composite was down less than a point. So basically, it was a flat day across the board. Usually, I would say that this little doji candle here might represent some kind of change taking place in the market, but I'm not convinced. And here's where we go from here to reiterate the numbers that should be meaningful, and I'll explain why they should be meaningful. So, I do my work on the E-mini contract, the ES contract, S&P E-minis. So I'm going to show you intraday, okay? So intraday today, all right, just let me get the chart up. Intraday today, okay, we came down and we hit a low early on, or I'm sorry, not early on, this afternoon. We hit a low of 2107.25. Now remember, I have been saying 2107, 2108 as a pivot point, okay? Now, this is evidence that that number is meaningful. 2107.75, okay? I'm sorry, yeah, 2107.25. And we reversed higher, never closed below it again, right? I said the same thing yesterday. I just, repetition is important in this business because markets tend to tell you what's going on. So the reason I keep telling you the same things over and over again is because sometimes we don't hear it the first time around. It's a casual listening experience, but the more you hear something, the more you pay attention and say, all right, maybe that isn't an important level. So here's what I'm saying. So today the low was right up against that level, and the level was defended. The market bounced up, and it finished, slightly up from there, but flat on the day. And basically, this remains. The market remains, whether it's the S&P E-mini or the Spider, remains in what's called a bullish position. Right? It's in an uptrend. There's nothing wrong with the market. We haven't seen evidence that the market wants to sell off. We know it's overbought, but a market could stay overbought a whole lot longer than most of us can stay solvent, okay? You're fighting the big banks. You're fighting the central banks. Never fight the Fed. Don't fight the central banks. Don't fight the trend, the tape. The trend is your friend. Don't fight the tape. All that stuff is important. Those sayings didn't come up out of the blue. They came up because they're meaningful. So where is let's go and find out what we're looking for as a downside waterline for tomorrow, okay? So if the low today, okay, was down here at the low is here 211.22 on the Spider, okay? Now, just underneath that is that waterline. So we're going to say 211, we'll just call it 211.20 for argument's sake, okay? 211.20, if the market begins to close, if the Spider begins to close on an hourly basis and certainly daily below that level tomorrow, okay, that would be a bearish signal. And why is this even further important? Because we're still in the 1 week late for a weekly cycle top. Okay, and if we ended up putting in that top between tomorrow and Friday, that would have, it's a valid signal. Meaning, how do we know we put in the top? If we get a confirmation low, so for example, if we get a close below that low tomorrow, that's confirmation that we closed below today's low tomorrow. That would be confirmation that the market has basically changed short-term trend. If it changes short-term trend, there's a very high probability that the weekly cycle top is in, and if the weekly cycle top is in, we could expect a couple of weeks of downside. If all this doesn't happen, what happens? Let's go over to the daily chart, okay? I'm giving you both sides because, frankly, the market's in a little bit of a no man's land, and we can't definitively say, here's what's going to happen because I saw this. I'm not seeing, the market's not telling us anything's going on. That's the problem. It's not tipping its hand as to what the next move is. So it's very difficult to, do an analysis when you have no evidence of something coming. So here's where we are. Our next target is basically this print up here at 212.97. Okay, which isn't all that far away from our high today was 111.25. Okay, no, that's the after hours quote. Your high today was 212.24 and 212.97. That's only basically 7-8 S&P handles away to get to that high. So that's certainly right in the wheelhouse of what this market could achieve, certainly this week. And if we saw that and saw a reversal, that would also be evidence that a weekly cycle top may be in. So I'm watching, and we'll keep updating you on a daily basis. Let me see what else I have in my notes here. No, I think I hit it. Did I hit it? Oh, I did want to mention one more thing. I'm always looking for market indicators, and we generally look at the IWM, but the IWM didn't give us anything today, anything to speak of, I don't think. I'm double-checking the IWM quote. There's nothing going on. But what did give us a signal today, maybe, at least the beginnings of something, is a confirmation turn, short-term, in Apple. Okay, so here's a daily chart of Apple, and you see what I'm saying is we took out the last 2 days, the lows from the last 2 days on this down day here. You want to see an intraday rollover? Okay, here's an intraday rollover. All right, so basically, Apple hit a high yesterday, opened, where did we open today? Down a little bit, I think. This is yesterday. Here we go. I'm sorry. It was right in front of me. Market gapped down today and then went sideways and then rolled over at the end of the day. And this is still setting up even to go lower yet. This is off the 10-minute, but let's look at the hourly chart. And if you put in, 2, 3, 4 hours of, kind of static movement tomorrow morning into the early afternoon, this could be setting up to go lower. We'll have to see how that plays out. This could have downside, it certainly could have downside to 125 and a half to 126. That's certainly feasible. We hit a high of 132, I believe, yesterday, 132.76 on the high. 133.60, pardon me. 133.60. We're currently trading at 128.78. That's a pretty good move in one day. So we'll have to see how that one, where that one takes us. All right, let's move over to crude oil. And we'll look at the crude oil chart, and what you'll see today is very interesting. Okay, I'm going to go over to where do I want to be? I want to be in the hourly. So 49.70 was the number I kept giving you. Let's put the crosshair on 49.70. Okay, 49.70 is right here. Okay, 49.70. What happened? All right, yesterday we chopped around and we failed at 49.70. We couldn't close above it on an hourly basis. And what happened? Convincingly above it, 1 hour I think we did, and then we dropped down below it. So we failed, and then the market sold off. And then today we made another run at it, and here's what happened. 49.70 is right here, okay? 49.70. I can't get the thing to stop there. It's 49.70. It's close enough. Guess what? As soon as the market got above that high, okay, it started on a run. It was a breakout, and the market went higher. So I think there's higher prices in crude oil. I think there's a cycle bottom forming. That's what my work is telling me. And so all things are lining up. 49.70 was a very important number. If you remember from a couple of weeks ago, I said a break of 52 will go right down below 50. We did that. I gave it to you on a Thursday or Friday. We did it on the Monday. We attempted it on Monday. We finished on the following Tuesday. That was last week. The 49.70 still holds. That was what the number I had that I gave you. I said could go down to 49.70, 49.80. Turned out 49.70 was the number. That I recalculated the number, and that was the number. We broke below that on that Tuesday a week ago. And then the 49.70 is still proving of importance because look what happened. We fought it. We were down here below it all the time. Okay, and then as soon as we were able to close above that, we took off to the upside. And, I think there's more upside to be had. Where could we go on the upside? Well, let's go over to the daily chart and check it out. Okay, where could we go on the upside? If there's more upside, we're going to have to clear above this 20 and the 50-period moving average. The 50-period moving average is at 51.20. We're going to have to close above there, at least, begin closing there hourly. And if we begin closing hourly, most likely close there daily, and then that could mean higher prices. And where do those higher prices take us? Basically, it's not going to take you much above this high here. So this is basically going to take us possibly to the top of the channel, best case in my book. Okay, here's your bottom of the channel. Here's your top of the channel. Okay, this could break to the upside at some point. I don't see it, but first we have to get there, and then how we get there will determine what the next move may or may not be. Okay, so for now, we're going to call it $55. We'll call the top of the channel $55 is going to be your upside maximum level that I think oil could reach, and that's if we get there. But I think there should be some more upside. Follow through hopefully tomorrow in the price of crude oil. A lot of you play it the USO. Some of you play oil futures. Either way, it's the same pattern. It's the same chart. It's the same movement. That's what I see. Okay. Let's just move through gold and the bonds, and then we'll wrap it up. So gold, let me find gold. Gold futures. Okay, so gold futures over here, let's go to the hourly chart, okay? And gold futures popped up last night, and then we sold off a little bit early in the morning and then tried to rally a little bit at the end of the day. Okay, I think this is in the wheelhouse. I've been pounding the table a little bit on gold. I think gold's a buy. It was a buy down here in the 1200 area. We tested 1190, 1191 a couple of times. I gave you that number beforehand. I said that was an important number that we had to close above. And if we close above that number, it puts gold in a more bullish position. And that's where we are today. So 1207.40 is where we are now. I'm looking for some more upside. If the corresponding corresponding numbers in GLD on the downside, I started giving out the signal at about 116 and said that in the zone was between 116 and 114, and that was it, right? So anywhere in that zone was a buy level for the price of GLD or gold futures. So I think there's more upside. Where does the upside take us? Well, we have to first look at the 50-period moving average, which by the time we got there, most likely the 20-period would be sloping into the 50, and that would provide a good level of resistance on the upside. So right now, our first target is up at about 118, and that's only about $2 from where we are now. But there's more upside from there. But first you have to get through one step at a time. After 118, you go up to about 119.5, 120. After that, you go to about 120.5 or so, and on from there. But we have to go one level at a time. But I think it's in the bullish period for gold, so I've been saying that for a number of weeks, and it's just taking a while to carve out a bottom here. But remember, it was a sell up here, and now it's a buy down here. Most of the time, your average investor or trader is doing the opposite thing. They're buying on the hype, and they're selling on the fear. We do the opposite here. Okay, let's go over to TLT, and we'll talk a little bit about the bond market, and then we'll give it a wrap. Bond market, I told you down here that it was putting in a weekly cycle bottom. The weekly cycle bottom took hold. We've had 3 good up days in a row for TLT. We're coming into a fair level of resistance here. Is there more upside? I think ultimately you could get at least to 132. But the market may have to stall out a little bit and might move sideways to downward for a few days, and then potentially could resume its upward movement, or we could just blast through it. Either way. But in a weekly cycle bottom, okay, you want to be buying pullbacks, okay, because there's higher prices while the weekly cycle bottom is playing out. if we've bottomed here, okay, we should hold for a few weeks, which means there's more upside coming. However, there's not every day is going to be up, so you come into daily cycle tops inside of the weekly cycle bottom, and we may be coming up to one of those tomorrow, but that's short term, and that doesn't have to mean that you pull back $2 or anything like that. It just means that the market's going to take a pause, maybe slightly pull back a little bit, consolidate for a while, and then it can build up some momentum to go higher. And that's what I think is going to happen in the price of bond market or TLT. Remember, sometimes we see an A, B pullback, C third wave. So it's an 1, 2, 3. It's an A, B, C. It's a zigzag, zig. It's whatever you want to call it, but likely that could play out here. That does a lot of times play out. Here's one, up, pull back, up higher, up, pull back, up higher, up, pull back, up higher. You know, it's just all time frames that happens. Here's up, pull back, up higher, up. Do we get a pullback? We'll see. I think that's all I have for tonight. I know it was long-winded, but hopefully it's helpful. I'm David Frost, mystrategicforecast.com. Thanks for tuning in for another episode of Common Sense Market Analysis.